Everything is selling off. So the triple Qs, if it's got to get back over this 185.30 to start filling in towards the 200, and that's very possible before we get any more downside. There's a good chance of bouncing back to the 185. It's got to get over this 185.30. So long as it stays under this, we should continue downside. So right now it's kind of at the top of the range. I would think that it would, it's just hard to say here. I would say if it rejects this and falls apart, we'll get 374. I'll take it without confirmation, and if it cracks that 374, I won't hesitate to get Apple. If this 230, it's kind of the same thing. It's right here at 230 again. I've got an opportunity to get long on a dip here to 230. Won't hesitate on this one either. Same thing. I probably won't have the same conviction that I had yesterday, the same size that I had yesterday on it. I really liked it yesterday. And I won't hesitate to get short if it gets under 230. Some bad news. Again, biggest data breach ever. And it's popping. So what that tells me right here, this right off the bat, it's popping right now. So it's going to give some nice strength to get short into. So I'll be looking to short this, preferably a double top. But even at pre-market lows, pre-market highs. So I'm going to be looking to get short pretty quick on this at the open. If it does pop up to here, I'll probably take a different strike and try it again here on the double top. So with a weak market and Facebook, yesterday having a decent day, I would imagine it would at least give up its day yesterday. So that's kind of what I'm looking at. Those are my four favorites. I really like Tesla too for more downside. The fact that it just couldn't break. If we get a bounce on the market, the fact that it couldn't hold that 300 yesterday. So I like Tesla for some more downside.
Well, traders, time for a daily recap. You saw some of the pre-market action where I was talking about the plan, what I came up with. So I did pretty good today sticking to the plan. I'll show you on Apple. I kind of piked out on some of the puts on that one, but we'll go over that. We'll show kind of in order how it went here. I took Netflix right out of the gate, Facebook right out of the gate. I did them exactly as planned. This thing cracked 374. It didn't even try to show any signs of support. It just looked so weak right off the bat. So I didn't even bother with the bounce at all. I just got short. Got a nice fill on that right out of the open. 20 contracts, and I'll show you what that looks like here in a second. And I ended up not working a core on this. It was quick. I waited for the 370 and I took some off here. Let's see, I waited for that 370, I took some off there, and then I actually took 2 strikes on this one. That's right. So right off the bat, the 365s and the 370s. So I took the 365s first, and right after that took 370. So I had the 365s loaded and the 370s. Right when it blew through here, I took 20 contracts to the 365s, 20 contracts to the 370s, and then I was able to work that core with those. So I ended up piecing out of different contracts at different places here, maximizing my gains on that across 2. So, and just to kind of give you an idea of the power of options and what I'm talking about, because I don't know if I got any piggy traders watching these videos or not, but let me just show you. Let me just show you. You're used to seeing, this is what you're used to seeing when you're trading pigs. This is what we do every day. This is what I trade every day now. I get this pig called Netflix. Every day we get moves like this. Now you see this 365 strike. It didn't move like this every day, but there's at least one strike that did. So this is how this played out. I got my first fill at $1.34 on the 365s right here. I got my first fill right here at $1.34. Okay, my 365 I've got my first sell was at $2.59, and which was right up in here, and then my next sell, my best sell, was at $4 even. And you can see it was time of day right here. It was double top. The way it was setting up, it was time of day for me to bounce. And sure, right after it was up to $6. So I didn't even catch the bulk of the move. But it's no different from trading the piggies. $1.35, no, that's not $1.35. It's $135 a contract. But the point is, with a cash account, there's no PDT rule. You get your money back the next day. Options settle T+1. So I get this question a lot. Should I trade options? Is it like starting over? No, it's not like starting over. You can see it right here, right? You can see this is exactly, I traded Netflix. I trade off stock. I don't trade off the option. I trade off the stock and what the stock's doing. I'm watching that Netflix 374. This is what I'm watching. As soon as this cracks, boom, I bought my puts. Okay, so that's the difference. You know, everything that you know about trading stocks, you bring with you to options. It's just I get to trade piggies every day, and it's the same ticker day after day after day. No more scanners, no more BS. I just trade good, solid stocks every day, and these are my piggies right here. So let's take a look at the 370. That's one strike right there, 20 contracts. So if you want to look at it like this, you want to know the cash amount, 20 contracts at $1.34. So that's $1,340 for 10, right? So I had, I don't know, $2,600. $2,600 cash right here is what I had invested. $2,600 cash. If you had a cash account with $2,600 in it, I'm not saying you would pile it all in one trade. That's not smart, but I'm just putting this out there. 2 contracts, 1 contract, whatever. The point is $2,600 cash right here. And, you know, sold these for $2,500, $2,590, and sold these for $4,000 on $2,600. Okay, every single day. This is what we do every day. When I told you yesterday in the daily recap that I went long and short the stock, I'm going to show you what I done on Apple next. Now let's look at the 370s, just so you can kind of get an idea. Because I know I blow through this a lot. I don't like to give out too much goodies because it's easy to put this stuff together, you know, and it's like I've worked hard to figure out the stuff. So this is the 370s. I took it within 20 seconds of that one. My first fill was at $299 on this, 20 contracts at $299, right? So I put $6 grand in this, $6,000 cash. And you can see this is a penny stock, right? You didn't have to buy 20 contracts. You could buy 2 contracts for $400, right? You're $300 a contract. You could have bought 2 contracts for $300 and still turned it into a nice fat gain. This went all the way to $10. 1 contract for $299. That's a $700 gain with 1 contract, right? This is what they did today. And again, I didn't hold through this whole thing. I sold right at the same time. I worked these almost exactly the same. So I sold my first 370 at $4.60. So right here into this, and I sold my next one at, where is it? At $5.90, right here. Right here in that same time frame, that same double top. And generally, I will sell 1 strike and I'll let another one go. The reason that I didn't was because Netflix was looking like it was going to bounce right here. It was really looking like it was going to bounce, and it did. But it actually, you know, gave up a whole bunch more. So what I normally do is I hold a piece, right? Or I take out 20 contracts on one and hold the other one, or I take out 80%. I take out 15 contracts on this and take out 15 contracts on the other strike and hold those other ones till the end of the day, or carry them on into the next day. I've already locked in my gains, but I didn't today. I didn't like the way things were trading. I didn't know there was going to be more downside. I don't have a crystal ball. I was expecting a bounce. This market likes to bounce, right? So I like to capture the short side bounces, short side when it's there. So yeah, I left a lot on the table, but I still did really well today. All right, so let's take a look at the next one. We'll look at Facebook. This is another one. Pulled the trigger on this one right out of the gates. No messing around on Facebook. I took 100 contracts. I got 2 pieces. I got in with 50 contracts right off the bat. I'll show you this one too. Didn't even hesitate on this. I took 50 contracts and then I turned around and punched it with another 50, I don't know, 6 minutes later. So on the bounce. So I took 50 and then I took another 50 on the bounce when it showed me that it was going to fall apart. But like I said in the pre-market plan, I had to plan to do this. Negative catalyst, weak looking market. I'm going all in. This was my favorite. I'm going in deep. I should have took even more. So let's pull this up and I'll show you the option contract on this one. It's a lower price ticker. It doesn't quite move the same. 97 cents was my first fill. My first buy was at 97 cents. My next buy was at $1.18. Okay, so I got in here and I got in here. It was 34, so it was all in the first 5 minutes. Yeah, no, 40 minutes on the next one. So right in here and right in here. And then if this thing went all the way to $3, right? So does this look like a penny stock to you? This is what I do every day. This is Facebook, you guys. This is Facebook. Look at Facebook earlier this week. It went from 40 cents to $1.80. right? I've got some really good strategies, man. Come by and I'll show you how I do it. I mean, it's cheap. I'll show you how I do it. It can speed the learning curve. You don't have to keep getting dumped on, you know. You can just buy what you can afford, and you don't ever have to lose more than, you could buy 2 contracts, $80 a piece. That's $160. You never have to lose more than $160. Even if this thing just falls apart, you're only going to lose $160. That's it. That's all you're going to lose. No more getting dumped on, right? So I sold these at Facebook. I sold half of them at $1.48 right here into this push right here. I sold half of them at $1.48. I sold 40 more contracts at $2.08. Where's that at? And I wanted to hold some of these till the end of the day. So I sold 40 more contracts here, and I had my last 10, and my plan on the last 10 was to try to hold till the end of the day, or it showed me some real signs of reversal. I didn't hold anywhere near the end of the day. I sold the last one at the last 10, I don't know, close to the end of the day, but not quite, at 276, right in here. So one of these spots right in here, I sold 276. It was in this candle right here. So it showed some bounce, and then when it came back and double topped here, I was like, oh, I'm just going to take the gains while I got it. And that's it. All right, so milked that sucker for all it was worth. So from 97 cents to 280. And I know what it's like reading through filings and going through all this stuff. I don't have to do any of that anymore, man. I don't even have to do it. You know, if I'm long-term investing, sure, I like to dig. I like to find out financials and all that stuff. But I don't have to. I don't even have to do that anymore. This stuff happens every single day. Now let's take a look at Apple. You don't even have to play the high price stickers. I just like them because they move good. Let's look at Apple. So you see all the plan I was talking about with Apple, what I wanted to do here. I pulled the trigger on the long off of 230, just like I had planned. And then I pulled the trigger on the short. So I took a 1R trade on the long side. Let me see where this is at. I took a half R first. I still, just like I said in the pre-market, I really didn't like it, nothing like I did yesterday. I took a half R at 96 cents. I'll pull up the contract on one strike. So I'm catching this right here. I got a 96 cents, and then I went ahead and took, it dipped down here. So I took it right here, and it got this dip, and I added. And I was in the money right here. My calls were green. I went ahead and took the short, and it put me in a green position on both sides. Now, the plan always is, when I'm long and short, is to just ride it out. Don't touch anything. Just let it work. Give it some time to work. This thing looked really strong right here. It was before all this happened right here. It looked so strong. It looked like it was flagging while the triple Qs were just falling apart. This thing was looking like it was just going to rip. And so what I do, I went ahead and got out of my puts. I took like a small loss on the puts, and then this thing fell apart. So this is another thing that's really, so I just piked out. I didn't stick to the system. The system says just hang on to those puts. And if I would have, it would have took away my 1R, right? So a 1R loss on here. And when I say 1R, I'm saying like I bought enough options here to where even if they go to 0, I lose the whole thing. That's 1R. That's 1R risk per trade for me. All right. So I take the options here, took the puts, I piked out. I took a small loss on the puts and it fell apart, right? Did not follow the system. So I took, on this dip down here, I took another, and this one I took about a half R because, you know, I missed the short opportunity. So I'm always looking for the bounce when that happens. I took about a half R on a different strike. So these were the 232.5s. The first ones, the next ones were the 230s. So the 230, and I had an opportunity to lock in some gains on this bounce right here. And I didn't. I just stuck to the plan. I said, you know what? I'm just going to hang on to this calls, and let's see if we can't get back up to the 230. This was going to be my target, and if it kept going, these would be back in the money, and I'd be solid. But it never happened. So I'm still holding these. They could come back tomorrow. The way I do it, I booked the loss today, and that's how it shows in my trader view. It shows as a loss today. So if it comes back tomorrow, I'll show it as a swing and a win. That's the power of options. I can't lose more than I've invested. I got a lot of time and energy into some quality content. So if you want to check it out, come visit smashthebid.com. Peace.